Hey guys, welcome back to Upside Down Data. This is a quick update about the current state of the UDPI risk indicators for Bitcoin, Ethereum, and the 18 altcoins we're currently monitoring. That number continues to grow, so feel free to leave us suggestions down in the comments if there are assets that we're not covering yet that you would like to see us cover. For those who aren't familiar, UDPI stands for Upside Downside Potential Indicator. It's our in-house risk indicator. We developed it here on the channel. And the way to use it is to identify assets that have UDPI risk that's low, specifically below the midpoint in negative territory. And so the reason that we put up these gauges that you can see is because it makes it easy to identify the needles that are tilted to the left, because when the needle is tilted to the left, that means that there's a relatively high amount of upside potential and relatively limited downside potential at that point in time. On the other hand, when the needle is pointed to the right, especially far to the right, that means that risk is quite high at that point, that some of the upside potential, maybe most of the upside potential, is probably played out, and there's plenty of downside potential remaining at that point. And so when we look at these, we can see that there are some in each category there, right? So if we wanted to think of it as some that are below the midpoint and some that are above it, we have some of each. The markets have been correcting, so that's some important context. They've been coming down. Bitcoin pulled back. Might be because of this bad news out of South Africa regarding a new variant of the coronavirus. And markets, traditional markets, are also pulling back on this news. So with that said, risk is coming down across the board as well. And from the perspective of finding a good entry, a low risk entry, we like to see that. As risk decreases, we get more bullish, because when risk decreases, that means there's less downside potential that's remaining, that's realistic, for the near future, but that there's plenty of upside potential that's realistic for the near future. So, we've been talking about some of these a lot. ADA, Algorand, Atom, these have all come up recently. The risk on all of them has continued to decrease. That's also true of XRP, that it's been low risk, although it hasn't been decreasing further. It's been pretty stable. We'll look at that in a moment. And there are some that have just recently crossed into this negative territory. Oh, I should have also mentioned HBAR, which is pretty low risk at the moment, but then there are others that have just crossed into this negative territory and are becoming lower and lower risk as they correct further. That's true of Phantom. That's true of Kusama, Matic, and ZIL. So these are some to watch. If you're looking for entries, these are some to watch because the risk has been decreasing. But there are some that are still quite high risk that have put in impressive moves recently and still might be a bit overextended. Most of all, that's true of AVAX, but it's also true of Elrond, Engine, and even Ethereum. That doesn't mean that we're bearish on these assets, by no means. But when we're comparing across different opportunities that you might have, this is an important piece of information that you can take into account, because if you're choosing between one asset that has risk at 1.73 and another asset that has risk at, let's say, minus 1.26, well, the risk to reward ratio, or the risk profile of those two assets, is clearly very different. And so right now is probably not the time to be looking at Avalanche. No knock on Avalanche, good project, good ecosystem, but very high risk right now after the move that it's put in. There are a few of these that I want to look at more closely, in terms of their trajectory over the past month, because we're getting a snapshot in time by looking at these risk gauges, telling us where risk stands right at this very moment. But it's also useful to see where risk has been going. How did we get here over the past month or so? And so we're going to look at a few of these. That's Avalanche for obvious reasons, because it's so elevated right now. Also XRP, and I'm also going to talk about DOT. We've been talking about DOT a bunch recently, Polkadot there on the left-hand column near the top, because DOT made a big run up into the 50s, and the risk became quite high when it did. The catalyst for that was these parachain auctions that I'm not going to talk about right now, but it's definitely something to be aware of if you're not already, and something to look into if you're interested in DOT. We were bearish when DOT's risk was above 3. like Avalanche's is right now. The price at the time was above 50, and lo and behold, price has pulled back. It's now sitting in the 35 range, and risk has pulled back with it. So again, let's take a look at how we got here for these three assets. Okay, so I think that these are interesting to look at alongside each other because they're quite different. So, on the left-hand side, we see XRP. We've been saying the same thing about XRP since we started the channel a couple months ago, which is that XRP is relatively low risk, but it's also not really moving. It's been flatlining for a while. XRP still has this regulatory situation that hasn't resolved itself yet with the Securities and Exchange Commission in the United States, so we're going to have to wait and see what happens there. Regardless, it's in relatively low risk territory, so it is one to watch. And if you were interested in XRP, that would mean that it's probably not a terrible time to be making an entry or to be dollar cost averaging in specifically. Very different story with DOT, right? As I just mentioned, DOT was very high risk. It was up around 3. It hung out there for a couple of weeks, and now it's been coming down pretty precipitously. And I think what explains that is that DOT was overextended. It didn't have to correct, but when the market did correct, overextended assets get punished hardest. So that's really one of the things to think about when you use these risk indicators, is when risk gets high, it doesn't necessarily mean that the price has to correct all on its own. But it does mean that it's risky. There's probably not a ton of support that's built up. It takes time for order books to fill up. So there's not a lot of support under a high risk asset. And when the market as a whole corrects, a high risk asset can go into free fall. So that's one thing to look for with these risk indicators, and we've seen that with DOT. It's been one of the hardest to correct, and now risk is looking decent again. That's interesting because the parachain auctions are still ongoing, and as I mentioned, I'm not going to get deep into what those are, but there's an opportunity there for those who are interested. And with DOT cheaper now, it's kind of like getting bonus rewards if you were to contribute to these parachain auctions, where you contribute your DOT and you get a reward. If the DOT is cheaper, well, then you get more DOT for your money for the same reward. It's almost like getting a bonus reward. So DOT is not one of the lowest risk assets, but if you were interested in using it and contributing to a crowd loan, then it's probably in a low enough risk territory after this correction that would be kind of an appealing thing to do. So it's an option to consider. So we want to think about these risk levels in combination with other information, with fundamentals and catalysts that are coming from elsewhere. By combining that information together, we can make the most informed decisions possible. AVAX is pretty simple here. The last thing I want to mention, it's high risk right now. It just made this run up. It came up to 140 after bottoming during the summer, all the way at $10. Very impressive run. Risk is now at 3. It's probably not the time to make an entry, especially with so many other options that are so much lower risk. So these are just some things to think about and to be aware of with the market correcting and risk coming down across the board. If you guys find this useful, subscribe to the channel, give the video a like, and follow us on Twitter at Upside Down Data. And remember, with the UDPI, we're all going to make it.